Hello, everyone, and welcome back to Sipping Wealth Live. Welcome back to a brand new week, brand new topic where I bring you news, tips, and tricks on how to wealth up. So, today I'll be going over some tips for my small business owners. Last week I went over tax tips in general for those that are in business and those that are not in business as well. But today I'll be focusing on my small business owners and providing y'all some tax tips. So if you're tuned in with me, go ahead and drop a comment in the comment section. Just say, hey girl, or, let me know where you're tuned in from, uh, chat with your girl. And also hit the share button. Make sure that you're sharing the live so that we are not wealthing up together, but your friends, family, loved ones, followers, all that good stuff is hopping on the wealth train, getting this knowledge as well. Um, we want to spread the news. Hey, what's good? What's up? What's up? Tuning in from Nigeria. Who's this? I wish it showed like who exactly it was. You in Nigeria for real? I don't know what the emoji is, but I'm sure on Facebook it's showing the emoji. Um hey. Hello person. Um hey, thank you. Continue to drop your comments in. Father Africa. Any sir. Stop playing on people live. Hey Eni, what's up? um Hello, y'all. So, as I'm talking, as I'm dropping these tips, you can drop your questions, drop whatever is, formulating in your head, whatever you're like, oh, shoot, that's a good point. Even if you're like, dang, girl, that was a good tip right there. Let me know. Give me some feedback. All right. So, let's go ahead and get started and pop into these tips so that those that are watching this, don't have to like jump through or fast forward or any of that. All right, y'all, let's go. So the first tip that I'm gonna go ahead and drop, I feel like if you've been watching me for a while, you already know what I'm about to say. You already know what I'm about to mention because I say the same thing in majority of my lives. All right. And it's about bookkeeping, keeping your accurate records, y'all. This is absolutely crucial. Like, so important in business and your personal life. Make sure that you have a detailed and organized records of all your business income, all your expenses, because one, it makes tax filing easier. Two, in order to properly budget and plan for the future of your business and the success of your business, you need to make sure that you know these numbers. Three, you need your financial statements if you're going to acquire funding, if you're going to provide them to your accountant so that you can file your taxes. And also, if you're looking for those credits and those deductions on your taxes, you want to make sure that you have your income and your expenses organized. I get it so many times every year, it never fails. And sometimes I get the same individuals every year. And they come and they're like, I thought last year was the year that I was going to make sure that I got QuickBooks or that I was going to make sure that my books were organized, and I didn't do it. Dang. My bad, Wadleen. And then all they have to show for their business is a bunch of bank statements. That's not enough. So we want to make sure that everything, all your income and expenses is organized, categorized. How much you're spending on each item. You know how much you're spending on supplies. You know how much you're spending on legal and professional fees. You want to make sure that you are keeping accurate records and that you're having your receipts as well. All right, tip number two. Tip number two is understanding your business entity structure. I have a lot of meetings throughout the year. This is a huge time for me where majority, I think in every meeting that I've had, strategy session that I've had within the last 2 months, I've talked about, their entity structure, their business structure. A lot of people come to me and they're like, "Oh, I'm a C corporation, and I set it up because I was getting into business and I thought that was the way to go." Or I'm a sole member LLC and I'm getting hit with self-employment tax. Whatever the case may be, but understanding what your entity structure for two big reasons, right? One, because it's going to tell you exactly how you're going to be taxed. Okay. And then two, because it's going to tell you how you're going to be taxed. So depending on where you're at, you may not have the right entity structure. You may need to consider maybe an S corp structure. You may need to consider, different entity structures. Maybe if you have a partnership, you have a JV going on, partnership thing going on. Maybe you want your S corp to own your partnership. Some kind of entity structure that makes sense. That's going to be beneficial for you. All right. Somebody said, I'm part of a, oh, yo. Okay. Excuse me if I don't say this correctly. Abahi Farah Traditional Kingdoms Investment Group. Let's promote Jacksonville, Igbo, Ija, Ikfra, Igbo, Ibwa, Bio, business investments and equality in our homelands with like-minded Black people, the Americas, Haitian, Caribbean. Okay. I think you're just promoting this Facebook group. And I'm trying to share. Okay. Let's see. All right. Cool. So that's for tip 2. Tip number 3 is going to be your home office deduction. So a lot of people leave this deduction on the table and they're like, "Oh shoot, I do have a home office, or I do have a space in my home where I'm storing supplies for my business. I use my garage to store inventory, or because I make shirts out of my house, so now I use my garage for storage and my bedroom to actually create the shirts." I don't know, just putting it out there. But home office deduction, or I do graphic designs, or I run a business where I do a service-based business out of a home office. Make sure that you're actually utilizing this home office deduction. So you're essentially, if you use part of your home regularly, like, and exclusively for business, you can deduct this. This could be eligible for the home office deduction. All right. So this is going to be a percentage of your home. So if your home is 2,400 square feet and your home office is 300 square feet, so 300 divided by 2,400. Anybody got that? Let me get my handy dandy calculator. Handy dandy calculator. Okay. I probably could have choose the prettier percentage. All right, 12%. 12.5%. So 12.5% of your home expense. Of your home is essentially for the home office. So that's your utilities. If you pay rent, that's 12% of your rent. 12% of the utilities for the home, the maintenance, and then anything specifically directly related to the home office. Maybe I had to renovate the flooring in the office, or I had to add a fixture in the home office space, or purchase a desk, or whatever the case may be. Those expenses are related directly to the office space. And that could be a deduction as well. But the overall home office deduction is the percentage of the portion of rent, utilities, and other home expenses as well. All right. Tip number 4, okay, is going to be your vehicle expense. Another awesome expense, relatively easy to go ahead and take advantage of this deduction. This is if you use a vehicle for business. You can deduct a percentage or a certain amount of mileage the mileage that you use on business. So if you go the standard deduction route, they want to know how many miles you're using in general on the vehicle, how many you're using on personal, and how many you're using on business. All right. So based on how much mileage you are using for personal versus business, it's going to determine your deduction. All right. So, and that could go, that can help with deductions like gas, maintenance, even the depreciation of the vehicle. This could help with. If you have multiple vehicles, maybe you have a business where, um, your child works for you. Um, your children work for you as well, and they use their vehicles for your business. Then that could be included in the vehicle expense as well. You can add their vehicles, but on that vehicle depreciation as well. And that same percentage that's used for business for on your that's used on your that's used for your business with that person, that personal vehicle or that person's vehicle is deductible as well. All right. The next tip is going to be retirement contributions. Let's not negate this. I went over retirement contribution last week, but on a business stand front, you have your SEP IRAs, you have your solo 401ks, you have uh, so many more options when it comes to businesses and setting up retirement accounts. Okay, you have your safe harbor plans. You have tons of options. Setting up your retirement plan through your business. For my business owners, yo, this is huge. Like making sure that you set up a retirement plan through your business. Like not only is it a deduction, but you're saving for your future, y'all. Um, yeah, and then you can set up your employee and your employer contributions, all that good stuff. If you have yourself on payroll, all right. Yeah, I could go in. And next year, I'll be having a live specifically for retirement contributions and stuff like that. So, continue to tune in to the Sipping Wealth Lives. All right. The next one is going to be hire family members. Hire family members. There's no reason why you are paying Cuzzo $2,000 or giving Cuzzo $2,000 just because. I had a client that actually came to me and they're like, "Hey, I want to help out a family member, and I want to give them money through my business, but they're asking for this amount of money. So let's say for this example is 3K. So this family member, I want to help them out. I want to give them 3K. It was actually more than that, but I want to give them 3K. And how can I do that? Do I just gift it to them? You can gift it to them. That's already money you pay taxes on their end. It's money they don't have to pay taxes on because of the gift tax exclusion. But on your end, you want to make sure that you can deduct this, right? So make sure that this family member does some work for this money. So if it's, hey, making them answer some calls or whatever they can do, maybe they are whatever they can do to input to add value into your business, go ahead and give them that task. If it's, hey, I want you to DM 20 people a day for this period of time and promote my business. If it's something like that, hire your family members. My niece is actually interning. She went off to college and she's like, "Hey, auntie, I have a load on me." Like, she goes to Howard University, and y'all know that tuition is like three people's annual salary. That's tuition to something serious. Um, but she's like, I do have a load, but you know, um, I'm like, is it possible that I could work with you or work for you and stuff like that? And I'm like, you know what? I always need assistance. I always have things that need to be done within my firm. So I'm like, yeah, of course. We need blog posts. We need this, da da da. I have like people, plugged in doing different things at my firm. So I'm like, yeah, sure, you could work for me. Instead of me saying to my niece, "Oh, I will give you $500, or I'll give you $1,000 to help you out this semester," she logs in her hours. She's on payroll, and she's an employee. I hired my family member, and And that's how you do it. If you have a child, hire your child, and depending on how old they are is going to give you the different stipulations, which I'm not going to get into all that today, but you know, we'll talk about it later. Okay. The other is going, and make sure if it's a younger child, maybe the child's 4 or 5 years old, make sure the task makes sense. Or, don't say, oh, um, they took out the trash and I paid them $14,000. You better have that baby put labels on something, have them do a little something, make the job make sense to what you're compensating them for. All right. Okay. The other is health insurance premiums. So this is another one that you can actually set up your health plans, your your medical plans, your HSA, whatever plans through your business as well. You can also qualify for your long-term care insurance as well, things like that. And you can set these things up. If you're self-employed, you can set these things up through your business, and it could be a deductible expense. So you don't have to wait. You don't have to do the whole itemized deduction threshold thing like that, where as far as the standard deduction is concerned. All right. Another tip is to defer income or accelerate expenses. So, that's two different tips. I'm going to break it up. Defer income. So, if you know you're making a huge sale, maybe you're selling a property and it's going to result in a huge capital gain. Something that you can do is actually take installment income. So, you can say, hey, I'm going to set this up where you pay me this amount each year over this amount of time, on this time frame, so that you're not having to pay capital gains hit one year, and take the hit all at once. That's an option. So you can actually defer that income. Another thing is, or you can say if it's towards the end of this year, like right now, and you know that, ooh, I'm already looking at a tax debt of 60K, and somebody's like, hey, I have a check here for you, um, for 50 grand, let's close this deal. Um, just say, hey, can you wait until the first, or can we like wait until the first to close this, or just go ahead and close it on the first so that it's in the new year versus it hitting in 2023. So go ahead and push out that income so you don't have to reflect it in 2023, type of thing. All right. The next one is accelerate your expense. So if you know that you have, and a lot of people do this towards the end of the year, they purchase an additional vehicle. They know hey, I have to get a new tractor, or I have to get a new whatever. Anyway, I'm gonna go ahead and purchase it now, or even accelerating your depreciation on something. So this year you can go up to 80%, and then it's going to go down to 60%, and from there until 2025. So you still are able to take a bonus depreciation, it's just not as much. All right. Mm, mm, mm. Equ- so this is a simple one, equipment and software. So this is if you purchase any computers, laptops. Oh, you know what? This is actually really good because I actually had somebody call in, and they set up a consultation with me, and they asked, they're like, hey, I started I'm a realtor, or I do some 1099 gig work or something like that, or Uber. It was something like 1099 related, and this is recent. So that's why I'm like, oh, what's it exactly? So this person was like, I do some kind of gig work, 1099 work, and I purchased a laptop, in order to do it. Can I deduct that on my taxes, or is that something? Can I do something with that? And I'm like, yeah, go ahead and put that expense on your taxes. Go ahead and add that to the schedule. So add that office furniture, add those tools, continuing education, those books, add that equipment and softwares that if you're like, oh, I had to purchase all these softwares to get this done. Like, those are deductible expenses for your business. So take advantage of that. Here's a big one: travel. Travel expense, y'all. This is a huge one. You know, I'm gonna have a separate live where I go deep into travel. So travel expenses, business travel expenses. So making sure that you take advantage of your business travels, or you take advantage of traveling for business specifically. So, and if you're going on a trip, and for example, you're in the real estate industry, and you're like, hey, I want to go to Louisiana. I want to go to Louisiana. I'm in the real estate industry. Why don't you use some time to maybe go look at some property, do some real estate related activities, do some business related activities while you're in Louisiana, so you could deduct a portion of the trip, or you could even, depending how you set it up, which I'll go over in next year's live, depending on how you set it up, you may be able to deduct the entire trip, just because you made sure that you worked on it, you did some business while you were on a trip, or a majority of business while you're on a trip. So make sure that you're taking it. And when I say travel expenses, this is airfare, maybe Uber, this is hotels, the meals that you're having, uh, you know, all that encompassing. Okay. And then, but when you're, the thing about travel expense, you do want to make sure that you are properly documenting it. Why did you go to this, the date? You want to have the itinerary, and you want to have the reason why notated on the itinerary or the receipts. Okay. Huge, huge, huge. Okay. Entertainment and meals. So this was the first year back, and the back from being able to deduct 100% of meals and entertainment expense. Darn. Yeah, that was great back in 2022 and 2021. Yes, the beauties of it. But for 2023, you are able to deduct 50% of the qualifying business and entertainment expenses. Well, I said business and meals expenses. All right. And so there are different categories as far as what the meals are related to. If it's client related, if it's an employee related, or if it's client acquisition, or maybe you're traveling, or maybe you're eating at a conference or things like that. So there are different categories as far as like what how they're being deducted, but it's up to 50% now versus the 100%. All right. So next tip is charitable contributions. All right. In our given season of the holidays. All right. So if your organization donates to charity, this can be deductible as well. Depending on your entity structure, if you're a sole member, sole proprietor taxation, then you're going to do your charitable contribution deductions on your Schedule A, your itemized deduction sheet. But if you're on another business entity structure, you may be able to go and take that dollar for dollar deduction for your charitable contributions. But again, these are expenses that you want to make sure that you have the receipts for, that you have the 501c3 paperwork for, from this charitable contribution tax exempt organization. All right. The next is the environmental tax credits. This does not get used enough by far. It's like the research and development credit. And I alluded to it on my post. So, this environmental tax credit, this is for businesses that have made environmentally friendly improvements. Okay. So if you had a green initiative within your company, something like that, this is for environmental tax credit is for you. Taking advantage of it. If you want to get in depth in this and see if you qualify for a book a strategy session, let's chat with it about it. Okay. Huge credit. It doesn't get used enough. The energy efficient credit, the Research development credit, this environmental tax credit, a lot of credits don't get used enough. And credits are dollar for dollar decreasing your tax bill. They're not like deductions, where deductions decrease your taxable income. Credits are decreasing your tax bill dollar for dollar. So credits is where you want to be at. Okay, if you can qualify for them, you want to make sure that you are taking advantage of them. Okay. And my last tip for tonight, okay, is going to be make sure. I know a lot of business owners, you get into business and the business is all you. You are the bookkeeper, you are the manager, you are the operations manager, you are the service provider, you are HR, you are everything to your business. When it comes to taxes, tax strategy, tax law implementation, things like that, you want to make sure that you're consulting a tax professional. Although you should be coming to strategic tax accountants, shameless plug, you just want to make sure that you are going to a tax professional that is knowledgeable, that is educated, and that you can trust, so that you are taking advantage and making sure that these tax laws and advantages are being implemented, and strategies are being implemented when your taxes are being filed. Okay, so make sure as well that you are consulting with the tax professional before you make these big decisions within your business, not after, where you're like, oh my gosh, it's December 1st and I went through a whole year of doing the most, and can you help me? All right, before the year start, or right when the year start, you have plans, or before that sale of the property, before you make these huge decisions, go ahead and consult with your tax professional. um in general, make sure that you're having multiple calls with your tax professional throughout the year. Do not just wait until tax time. Like, you've already lost the war at that point. You could probably win a couple of battles, maybe, one battle or two, but you basically lost the war, and there's going to be some kind of a tax bill. So you have deductions galore, and your taxable income is minimal. All right. But those are my tax tips for my small business owners. To recap, I gave you making sure that you're keeping accurate records, understanding your business structure, your home office deduction, vehicle expenses, retirement contributions, health insurance premiums, hiring your family members, deferring your income, accelerating your expenses. All right. Making sure you write off your equipment, software, business travel, meals and entertainment, education expenses, environmental tax credit, charitable contributions, all that good stuff. And if you do have questions after this live, and make sure that you reach out, that you set up a consultation at strategictaxaccountants.com, for ourselves, and that you follow and subscribe to Sipping Wealth YouTube channel and Facebook groups and Instagram, all social networks. Make sure that you tune into us so that you don't miss out on any more lives. Make sure you put your notification bell. And thank you for tuning in to another episode of Sipping Wealth Live. Y'all have a wonderful, amazing, and wealthy week. And make sure that you are back next week. All right. Make sure that you are back next week, while so that I am going to be live on Tuesday next week and Thursday next week. So Thursday is going to be repeat of Tuesday, but you want to make sure that you are tuned in, and while I'll be going over navigating complex tax situations. All right. Nope, I won't. I'll be going over smart tax planning for 2024. Okay, so we are planning for a successful 2024 year. So make sure that you are tuned in to the next Sipping Wealth Live, and next week, Tuesday, y'all. All right. Have a wonderful, wonderful, amazing, wealthy Tuesday.